Hello and welcome to another very special interview of the Quint. And right now we are sitting with Mr. Praveen Chakravarty, who is the chairman of the Data Analytics and Professionals Congress. Mr. Chakravarty recently wrote an article for the Deccan Herald, which many of you may have come across, which was headlined The World's First Exit Poll Stock Market Scam. And this conversation is about that article. Also, do keep in mind that Rahul Gandhi also recently kept a press conference where he demanded that a joint parliamentary committee be constituted to look into the same. So, Mr. Chakravarty, thank you so much for taking out your time to join us. Could you please sort of explain the fundamentals of this alleged scam, what you wrote in the piece? What is the concept that is being deployed here for you to take the word, use the word scam, because it is a very serious word. So how do you back that up?
Yeah. Thank you. So let us start as a story. Okay. On the 31st of May, 2024, which is a Friday, there was sudden frenetic activity in India's stock market, which is the stock exchange, National Stock Exchange of India. The volume of shares buying and selling, and then there is something called derivatives. There is shares and then there is derivatives. So the volume of activity, which is people buying and selling, doubled from the previous day. Normally, when such volumes double or rise 100%, it usually happens on some big news or big development, like it happened on 16th May 2014, when the election results came and Mr. Narendra Modi was elected as the prime minister with an absolute majority. And that was the first time in 3 decades that would happen. So volumes doubled, right? So the question to ask is, why did the stock market volumes double, activity double? 31st May, Friday, there was no news. There is no big news. The next day, 1st of June, which is a Saturday, was the final phase of polling. And the exit polls were announced. Exit poll results came on the 1st of June, Saturday evening. Somehow, magically, all the exit polls said the BJP was going to get nearly 400 seats and they were getting an absolute landslide majority. So, when the markets opened again on Monday, the 3rd of June, because the exit polls had said that, the markets went to an all-time high. Obviously, there were a lot of people who bought stocks the previous day, which is on 31st of May. So what happened to their stocks? It went up in value. When the results came, it was very clear that the exit polls were way off. And the markets crashed. They crashed by 30 lakh crores. It was the highest fall in its history. So the question to ask is, why did the stock market activity double and rise so much on a day when there was no news? Exit poll predictions were not public. They were known only to the pollsters and the media organizations. So, if this is the chronology of events, in any country in the stock markets, there would be an inquiry into this.
So, thank you for explaining that. And on that note, since you mentioned that exit poll data was, of course, extremely private, known only to the pollsters and the media houses, and I believe in your article, you have mentioned that it is not possible to track back every investment and buying and selling, but it is possible to track categories. And I think you believe that the foreign investors category seems to have made the biggest chunk of this profit over the May 31st to June 4th. So could you perhaps delve a little bit more into that? And does this also mean that there is a possibility that that data was indeed shared with foreign investors before it was shared with us?
Correct. See, I think first thing we have to understand is there are 3 categories of investors in India's stock markets that for which we get data on a daily basis. This is public data. One is retail investors. These are common Indian citizens who invest in the stock markets directly. Second is what called domestic institutional investors, which are Indian mutual funds. So these are domestic in India and these are Indian mutual funds. The third are foreign investors. Now remember, foreign investors invest in Indian stock markets through tax havens like Mauritius, Cayman Islands, right? So they come in through these tax havens. So realistically, we actually don't know who the end foreign investor is, because we only know of the entity that is coming from Mauritius. So if somebody wants to hide and invest in the Indian stock markets, they actually will do it as a foreign investor coming through Mauritius. It could be Indian investors who are coming in as foreign investors through Mauritius. Okay, so that is why the definition of foreign investors is important in this story. Now, what happens on the 31st of May when there was such a sudden volume? It turns out that on that day it was foreign investors who did 60% of all the buying. But in the days before, foreign investors were not buying; they were actually selling. They were net sellers, as they call it. So they were not buying shares. Why is it that on that particular day, foreign investors turned bullish on India suddenly and bought stocks? And these are this could be a group of foreign investors. So and that is why it raises the question: A, there is strange activity without any news. B, the chronology of events, which is exit polls and then the results, induce tremendous volatility in the market. C, a lot of the activity is through foreign investments, which typically come through Mauritius and are hidden. So this raises serious questions.
Right, sir. And then in that case, now again, stock markets are not my strongest suit, but I do believe a question that may need to be asked is that was short selling, is it possible to sort of theorize if short selling was also involved or not? For instance, I think in your piece, you have argued that stocks were bought in bulk and then they were sold off and then the market crashed. Now, is it possible that the reverse happened, that they were sold off first, then the market crashed so that the value came down, and then investors bought again, which I think amounts to short selling? Is there any way to prove that? Do you think that happened? Is this another way to look at it?
See, in fact, all of what you have described could have happened. Okay, there could be investors that invested on before the exit poll results came out, sold when the markets went up, made their money. And also, there could be investors who knew that the next day this market was going to tank and could have what is called shorted the market. The idea is that using instruments such as derivatives, complex instruments such as derivatives, investors can profit from both the rise in the markets as well as the fall in the markets. Basically, investors like it. They profit a lot when there is what is called volatility. Extreme volatility goes up, comes down, goes up, comes down. And this is, this I can tell you, there was a lot of derivatives trading volumes. Now, who made money? Who did not make money? Did they know anything beforehand? These are the questions we're asking, right? So the questions I'm asking are very simple. This is the chronology of events. I have given out whatever has been public data, and I've said this is what the situation is. So then the questions are, who are these people who traded on 31st of May? What did they know? Why did they trade so much? How much money did they make? What is their connection to the pollsters? On whose behalf did they invest and play in the stock market? And whose money did they invest? The answers to all these questions are actually already available with the securities regulator, the Securities and Exchange Board of India. Which is why I am saying, and the Congress party is saying, Mr. Rahul Gandhi said in the press conference, we want an inquiry, a joint parliamentary committee to investigate and inquire into this and ask the securities regulator to give us this information.